Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund. Thank you, everybody, for joining. All of you are welcome today to spend some time with us getting prepared for the market open. So let's dive in quick. What are we going to talk about? Big picture risk monitor. Our risk monitor is yellow. So we're going to talk about what may change between now and the end of the week. Top stocks to watch. I'm going to highlight for you one stock I've been hunting for a while. I'm getting close to adding to my portfolio. I want to talk to you this morning about the unbelievable bubble in AI, and it's not what you think. I'm not going to be talking PE ratios and stuff like that. I got a bone to pick, and I want to share it with you. So we're going to go over that. We're going to go over Bitcoin. I'm happy to talk about cannabis if you want. So throw a question into the comment section as I'm chatting. I'll try to answer it. But at the end of the day, before we get started, pen, piece of paper, get your mindset, and remember, whatever I say, this is how I run my own personal capital. It's a virtual hedge fund. I'm running capital for others. We have subscribers. We're all working together on the trading desk during the day, gathering information, executing together, and all of us have to execute our own strategy. You got to figure out your risk tolerance, your goal, all that kind of stuff, and be the smart money on your own. Now let's dive in. Okay. First thing we want to talk about is big picture of the market and what's happening this week. So market kind of wobbled yesterday a little bit. Really, the market's just kind of biding its time, waiting for the Fed to make comments at Jackson Hole, right? We're all waiting for Powell to make his comments. At the top, you see the S&P and the NASDAQ weighted indexes. These are two of our 10 indexes we use in the risk monitor. Okay, the risk monitor is yellow right now. Then below, we've got small caps equally weighted in the Dow. We have algos designed for each one, the volatility of each one. Okay, and so a lot of noise right now, but you can see from these charts, not a lot going on. Markets are still in a pretty strong uptrend, pulling back to maybe the 14-day, 25-day moving average. That's a strong uptrend. So nothing's really happened yet. The market's doing this until we get to Friday. What do I think is going to happen Friday? I'm going to tell you right now that the market's pricing in something better than an 85% chance that the Fed's going to cut rates more than twice between now and the end of the year. And I think the market's pricing in comments from the Fed on Friday that are just not going to happen. That's my base case scenario. I mean, what do I know, right? Who knows? Fed could come out. Chairman Powell could be totally different than he's been during his entire tenure, and he can come out and say, I think I'm going to cut rates now. But when we look at some basic numbers, why would he do that, right? We have core inflation at 3%. Inflation numbers kind of hot recently, right? GDP at 3%, unemployment at 4.2. Do those sound like numbers that would get you as a Fed chairman to start cutting rates? So basically, the only reason he would cut rates is because he's getting beat up constantly by the president of the United States to cut rates. Odds on bet for me is he's going to say nothing on Friday, except for more of the same. We're going to wait. We're going to look at data. Some things in the data look disturbing. Other things look, I mean, it's the same word salad, nothing. And yet the market's pricing in a couple of rate cuts. Some people think 3 rate cuts. We're going to read and react to price action. Risk monitor's yellow right now, telling us not ideal time to put a lot of capital to work. Time to be protecting capital, managing stops, managing targets, booking profits at targets. That's what the risk monitor's telling us. A definitive breakdown at the end of this week, a weekly breakdown, risk monitor goes red and we get more aggressive in that process. But what I'm saying to you right now is we've added some names recently. I can share with you a couple names we've added to the portfolio the last couple of weeks. Things like the steel stocks, okay, before Warren Buffett's announcement, okay, Cleveland Cliffs, Nucor, added Micron. Okay, so on the one hand, there's a story the government's going to take a stake in Micron. I really hope that doesn't happen. But the market seemed to like that. I don't like that. And then this morning, there was some comments out of a competitor that, you know, put Micron down like 5 or 6% this morning. Now it's down 2.5%. But anyway, I'm just showing you a couple names we've added recently. EQT, we're trying to buy one of our favorite natural gas stocks on the 200-day moving average. Okay, so you know, here's like a CLH. We were buying Celsius in here. But what I want to tell you is that over the last couple of weeks, we've added a couple names, even though the risk monitor is yellow, and we're not making a lot of money on them. You know, a lot of swings, a lot of sideways action, a couple of stops hit. And so looking at the risk monitor, looking at the risks to the end of this week, right now, there's a moratorium on investment. We're not adding anything new to the portfolio. We got about 30% cash in the ARMR flagship fund, okay, which is fairly decent cash position for us. And we'll be raising cash, obviously, if stops get hit. So we're going to manage our stops. If the risk monitor goes red, we'll raise cash more quickly, okay? So that's the macro picture of how we're running money. Now let's talk about something. I got a real bone to pick, all right? I'm going to put the Google chart up. We're going to talk about Google because I think Google's the winner. But my bone to pick with you is AI, maybe not with you, but with the market in general, I got a bone to pick. AI is in an unbelievable bubble. And it's got nothing to do with earnings and revenue and PE ratios and all that stuff, okay? And I'm not comparing it to the internet bubble or the PC bubble, which you could. When the PC came out, it went through, you know, a series of 50% corrections on the way to the moon. Microsoft, IBM. You know, when the internet came out, right? Huge runs, 50% or more corrections on the way to huge investing successes. Okay, what I'm saying is we're in an insane bubble on AI, and this is the reason. Billions and billions of dollars have been spent on ChatGPT, on Grok, on Gemini. And at the end of the day, these things are just glorified search engines. They're the next iteration of a search engine. We've been doing some tests here on our trading desk, working with all of them. And yesterday it was like just definitive. I've done more than one example. That I'm going to give you one example, okay? I asked Grok, I started with Grok, and I asked it a simple question. I just wanted to know the gross margins of a company that I'm looking at over the last 3 quarters. And I wanted it to give me a conclusion as a financial analyst. Is it bullish or bearish? It's a simple question. What are the gross margins in the last 3 quarters? And what can you infer from the direction of gross margin? Okay. So you have different models. You have the basic kind of search engine model, which is like Gemini free. The Gemini free version is kind of like a search engine because I could answer that question. I asked all these models myself, right? I could go to Google, I could search the financial reports, and I could pull out gross margin. It's not a hard thing to do. It's the kind of question you would ask as a hedge fund manager. I had interns, and I might ask an intern to go do that research for me and tell me what they think of the gross margin direction. It's a simple, I mean, this is like a stupid, simple question, okay? The best result, the only result that was correct came from Gemini's free version, which makes sense because that free version is just the next iteration of a search engine. And Google has the best search engine. So it goes out there and it pulls the numbers. Grok's numbers were incorrect. It pulled 3 numbers, only one of which was correct. I don't get it. And this has happened multiple times with Grok. And I'm paying for the Grok version. So this is the reasoning Grok. It's reasoning. You know, I asked it a question on an earnings announcement day. Check this out. I asked Grok, it was like, I don't know, 4:15, and I was curious if the news was out and I didn't see it yet. So I asked Grok, what are the earnings of this company for this quarter announced today? And Grok gave me an unbelievable detailed answer that was totally incorrect because the news hadn't hit the tape yet. About 10 minutes later, news hits the tape. I asked Grok, how could you give me this number when it wasn't out yet? How could you give me this detailed earnings announcement? It was like an earnings announcement that came from the company. And then Grok said to me, oh, that's my mistake. The number wasn't out yet, but I inferred from previous quarters what it would look like. And that's what I gave you. But it didn't tell me that. It just told me this was the story. It said, this is the story today. Billions of dollars has been spent on reasoning AI, and this is the crap we get? It's unbelievable. So let's go back to yesterday. Simple question. 3 quarters, gross margins, and in this case, the gross margins are increasing. So I wanted to see if this reasoning AI could tell me that that was bullish, right? Gross margins are going up. Totally false information out of Grok. And here's the thing that just blows my mind. We asked Gemini Pro the same question. It only came up with 2 quarters. It wouldn't give us 3 quarters of data. Now, Gemini Pro was better. It only gave us 2 quarters. And when we asked us, why didn't you give us 3 quarters? It said, because the next quarter is not going to announce for 2 weeks. So that news isn't out yet. And then it apologized. That was a mistake. It was inferring from my question. It was thinking, it's a thinking AI. And because this quarter's news isn't out, it only gave me the last 2 quarters, which was, and it admitted that was its mistake for thinking. It shouldn't have thought, it should have gone back 3 quarters. And it gave me the right information with the correct conclusion, which was rising margins is good for the stock. But my point of this whole conversation with you, oh wait, I forgot to tell you, this is the kicker. This is the funniest thing ever. We asked ChatGPT the same question, the same prompt, and it came back. I can't get that information for you, but here's the steps for you to do it. Here are the steps for you to do it. Billions of dollars have been spent on ChatGPT AI. It can't pull simple data, but it'll tell me how to do it. That sounds like, if you look at, like, if you think about interns hired at a hedge fund, that intern's the millennial. I mean, he doesn't feel like doing the work, but here's how you do it. I mean, you're fired. You're fired. Get out of here. There's all kinds of kids that want your job. So 4 different search engines, 4 different answers. The best was Gemini, which just went out there, crawled the web, pulled the numbers. That was the free version. And so billions of dollars are being spent on these supposedly brilliant thinking AI models, and they can't answer simple questions. So what's the investment fallout from all this? Where does it leave me from an investing point of view? Well, first of all, NVIDIA, AMD, those are probably still the best AI investments. Because if they've already spent billions and they can't come up with an answer better than an intern, the intern would come up with a better answer. If they can't come up with a simple answer like this, then I guess they got to spend billions more. Everyone keeps telling me how brilliant they are. They're going to outthink humans. It's going to happen, blah, blah, blah. So what am I doing now? I have to run like 2 or 3 different versions. I ask the question to Gemini, then I ask it to Grok, then I cross-reference it with ChatGPT to see who's lying, who doesn't know what they're talking about. And so This is supposed to speed up the process for me. Hey, man, at the end of the day, I'm just going to go Google the question and do it myself. And it'll happen faster than asking AI. Not to mention the fact that if I can't trust it to answer that simple question, how do I trust it with anything else? How do I trust it with anything where I don't already know the answer? Do you see what I'm saying? And I got people out there using Grok like to answer medical questions. God forbid. Boy, you better do your own research. You better Google things. If you get an answer from one AI model, you better ask another one to see if they agree. Man, we can't, on this desk, we can't get Grok to agree with Gemini on anything. How can I use these products? I mean, I'll be honest with you. At the end of the day, they're totally worthless. I mean that sincerely. If I can't ask it a simple financial question and get the correct answer, how can I ask it anything? You want to use it for images? Hey, that's lots of fun. Totally cool. Take an image, do this with it. That's great. Canva's dead. I mean, make a thumbnail like this. Happens wicked fast. So are there certain things that AI could do well? Like small things that it could do well that are kind of fun things? Here's the ingredients in my fridge. Come up with a recipe. It could do that. Billions of dollars for that answer? I could have Googled that. Do you see my problem? It's really disturbing to me. I do think Gemini, at the end of the day, is probably the best answer. And I would ask Gemini Free and Gemini Pro to see if they could agree on things. But even then, I have to go and verify it. If I have to go and verify that it's real, then it's totally worthless. All right. I've said my piece. I don't know, each one of them is flawed in its own way. Each one of them has a cool feature that works and other ones don't. Total bubble in AI. Total overhyped. Totally overhyped. Then I start thinking about these niche players, these AI niche players that tell us how great AI is in helping them do X, Y, and Z. How do I know that's true? I don't use that niche. I'm just taking their word for it. How do I know it's even true? I can't get simple AI models to answer simple financial questions. I don't know where this leads, but Fed doesn't cut rates, risk monitor goes red, and money supply levels off, and there's a serious amount of air going to come out of these stocks. I don't know when, but I'm certainly, I got my, I'm concerned, and I wanted to share that with you. All right. Highlighted stock of the day is Philip Morris. Philip Morris, the highlighted stock of the day. I wanted to share this with you. I've been hunting Philip Morris all the way up. Okay, it's just run away from me, and I've just been waiting for a sell-off down to the uptrend so I could add this to the portfolio, 3.5% yield. While I wasn't on Philip Morris, we've been all over British Tobacco, which has just been an unbelievable ride. We got like a close to a 9% dividend yield, and the stock's gone ballistic. We also own Altria. Same situation, close to 9% dividend yield. Stock's gone ballistic. Okay. And so now I'm looking for a Philip Morris, which is the third piece that I want. And I just was waiting for a pullback and a setup. I'm waiting for an ARMR algo buy trigger. That might end up in the portfolio. Let's run through Bitcoin for a second, okay? Bitcoin's got an uptrend right here. We got long Bitcoin right here, which is around the 21st of April. It's rallied up to here. It's put in a small double top, and it's challenging support, okay? So Bitcoin closes below the uptrend. It just did that. And below the 50-day moving average, which is somewhere around 113, say 113,000, closes below there, you know, something's not right. And the problem is, this is one of our 10 indexes in the risk monitor. This is the lead indicator of risk on, risk off. We break below 113, it's risk off for Bitcoin, and it suggests risk off for the rest of the market, which we got to keep our eye on. So staying diligent here. We have a minor position on Bitcoin. If it holds here, double bottom, starts to move higher, I can make that a max position. But right now, caution is the word on Bitcoin. And while we're at it, can we talk about MicroStrategy for a second? Okay. That is an unbelievably ugly pennant formation with a breakout failure breakdown. Okay. And I got to ask you, who in their right mind owns strategy stock? Who in their right mind owns this equity right here? It's the whipping boy of the capital structure for strategy. I'm going to call it MicroStrategy. Okay. It's the whipping boy. They dilute and dilute and dilute these shareholders to support their converts and their preferreds. I don't know why anybody owns this asset. It's trading at about 150% above net asset value of Bitcoin. It doesn't make any sense. And it only took 3 weeks for Michael Saylor to come out and say, yeah, we're going to dilute these shareholders more. So 3 weeks ago, whatever, I think it's 3 weeks ago, on the earnings call, they talked about below this level, we won't dilute these shareholders. It only took 3 weeks for him to pull back on that comment and say, well, under certain circumstances, we'll keep diluting them to support the dividend on the preferreds. I don't know why anybody, let me tell you something. This is like, it's not a closed-end fund. I get it. But it reminds me of closed-end funds. And normally they trade at a slight discount to NAV. 150% above NAV. It just doesn't make any sense. And the biggest problem for this company right now is that the story of issuing and issuing and issuing and buying and buying and buying Bitcoin, it made more sense when the government was against Bitcoin. The government right now is making it easier for everybody to buy Bitcoin in any type of retirement account or whatever. And so the need for an asset like this, or for converts, or for preferreds, is becoming less and less necessary. And at some point, this becomes a major problem. Can it go down if Bitcoin goes up? I think probably. I mean, if I was running a real hedge fund like in the old days, I would definitely be short this asset against my long Bitcoin position. Definitely. And I bet a lot of professionals are doing that right now. I'm thinking about doing it. I'm looking at puts. I'm looking at how could I get on this position, not just as a hedge. I think it goes down a lot. I mean, God forbid Bitcoin goes down. This thing is lights out. And then Saylor came out and said something the other day that was, boy, I don't think he should have said it. You know, it's totally going to botch this Shakespeare comment, but, you know, methinks thou dost protest too much, right? He came out and made a comment. Why? It was like an unsolicited comment on how even if Bitcoin went to $1, it wouldn't affect blah, 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 blah. Why is he doing damage control already? Bitcoin at $1? Why is he even talking about it? That's all I have to say on MicroStrategy. And be wary of Bitcoin. And if it breaks down, this is a serious problem. Those are my thoughts for today. I'm just checking. Is there anything I missed? I don't think so. Although I'll touch on precious metals. My precious metals page right here, we got gold, silver, and the mining stocks. Okay. That does not look good. So this is not just a Bitcoin question. It's a metals question. What does that mean? Does it mean, I don't know, a stronger dollar? I don't know exactly what it means, but this is the gold chart right here. And look, you know, I love gold. We made a lot of money on gold over the years, and I'm probably going to keep making money on gold. But if I didn't know what this asset was and you just showed me this chart pattern, I would say to you, this is going lower, and it might go a lot lower. This is 1, 2, 3, 4. These are the best pennant formations. 4 up and out. 1, 2, 3 attempts. The 4th attempt should have been up and out. Instead, it failed. It's made a lower high, and it's breaking down out of the pennant. Something's not right, guys. There's a lot of things just aren't right. So that's the bell ringing. I've got to go. I hope you found the information helpful. At the end of the day, it's not investment advice. It's how I run my own portfolio. You've got to figure out your own risk tolerance goals and execute your strategy. Be the smart money, guys.